welcome on board Santosh Rao to make sense of all that's happening across the globe. He's head of research and partner at the Manhattan Venture Partners as well. Santosh, hi, good morning. Thank you so much for making time and speaking with us. Well, First Republic was the second biggest failure that we had seen in the US history, the fourth regional bank to collapse since the start of this year itself. But Jamie Dimon now saying that this is perhaps near the bottom. This is perhaps going to be the end. Do you concur with that view?
Well, that's the hope. At this point, we definitely dodged a bullet near term. But normally things don't happen in isolation. There are two or three events that follow. So I think hopefully he's right. There are not that many. We thought after Silicon Valley Bank we were okay, but then this came up. But this one was there was a run on the bank, the classic run on the bank. So they had to do something. We knew JPMorgan or some big bank would come in. So that was not an issue. We knew there wasn't going to be a contagion effect and all that. So that said, fine, it's contained at this point. So far, so good. So let's wait, see. As Jamie Dimon himself said, this part of the banking sector is contained. So there's no issue here. So unless something else happens on the commercial real estate side, I think we'll be okay at this point.
Yeah, in fact, Jamie Dimon saying he's the CEO of JPMorgan, which has bought out the bank, First Republic, saying that our government invited us and others to step up, and we did. He's saying that this acquisition modestly benefits our company overall. It is accretive to shareholders, if you can just bring out that quote, saying it helps further advance our wealth strategy and it is complementary to our existing franchise, saying that there may be another smaller one, but this pretty much resolves them all. This part of the crisis is over. But Santosh, since you talked about the contagion word, has the market priced any contagion, if at all it be?
It has not. At this point, there's a fear, but it doesn't seem like it's happening. I think the market regulators have managed to really contain this part of the market. I think the bigger issue for the market is not just the banking crisis. If it happens, I think there's enough liquidity and enough tools to manage that. The bigger crisis is the same old inflation fight. Will he raise the rates? The problem is he has to raise the rates because it's baked into the market, the expectations. If he doesn't, then things will look like it's really very bad out there. So he doesn't want that impression to get out there. So he's more focused on that side. The banking is a side issue at this point. It's more about the macro economy, the inflation and the interest rates. So let's wait and see. 25 basis points is a given, but the commentary after that, is he going to say that we're going to stay here at the median rate of 5.1%, which he said that he would do, and just wait and see the lag effect of all the past raises. So let's see if that's what. We don't want any more major issues cropping up. If that happens, I think he'll stay there, and the market may ultimately end up being right in terms of him cutting rates down the road. Definitely not this year, but maybe early 2024. Maybe he'll start. But at this point, he's hell-bent on fighting this inflation, which is really stubborn. It's not coming down.
Okay, so that's what the expectation is as well from the US Fed. And Santosh, give us a sense as to as well what the outlook is going to be going down the line in terms of, the jobs report as well that's expected. How do you expect investors really to react after digesting all of these data points?
Well, we are in a situation where bad news is good news. So we don't want, I think the expectation is around 180,000 jobs added, lower than last month's 216,000. So it's definitely, the economy is decelerating. We are on the right track there. So we want things to continue. Any worse news is even better because his policy, as far as Chairman Powell is concerned, his policies are working. So we don't want a hot number. We want that or less than 180,000 added. So I think let's wait and see. And things look like it'll be that way. It might be 180 or less because the layoffs are going up. Companies are cutting back. The demand side of the equation is weakening slowly, even though the consumer is still relatively healthy, but it's weakening. People are buying down and cutting back. So things like that. So overall, demand is weakening. Hopefully it continues and he can start tapping the brakes and ultimately say, you know what, that's it, we're done. And that's where the hope is. Let's wait and see. But jobs report is going to be a very important piece of this whole puzzle right now. And if it's a hot number, it's bad. If it's a light number, that's very good.
All right, that is going to be fairly critical, and the street will be closely watching out for it. Thank you so much for taking time out and joining in.